some ramblings on wave force theory and time zones. Something I've come up with over 20 years of trading and learning. A lot of it was brought to me by floor traders. Anyway, let me just see where this goes. So this was Friday, I think it was 1/18/219, and this is FANG. FANG meaning Facebook, Amazon, Apple, Netflix, and Google. Pretty much the same chart for QQQ and NQ. And I use this with I'm looking at like 12 different screens, so I'm using a lot of things, but this will be a good example for what I'm going to present. So I'm trading within time high and low probability time zones, and some people look at 10:30 as the beginning of something called session 1, where a lot of big players come in and put on one big move, and then they cover and exit generally 11 to 11:15. It varies, but these are just edges and probabilities, and much like the market ranges 80%, 70 to 80% of the time, and trends the rest. Same with these edges and probabilities and tendencies. I look at the market as being in a battle between these tendencies, which are regular waves and patterns and the way traders normally would trade due to their psychology and cognitive biases, and that's opposed to just big order agenda, order flow, maybe off of a catalyst or some earnings or something like that, when things just go into trend and they overtake and overpower the natural tendencies. Well, even then, the natural tendencies will show up in there, but they'll just be, instead of resolving in a tendency manner, they'll resolve in a big order flow agenda manner and just keep going in trend, but you'll still see the pullbacks and stuff. But anyway, this is a good example because there was an initial move down, and what I've got on this chart is this yellow zone is the opening 1 minute range, which is some view as having the biggest gravity of anything on the chart. The price will tend to return there more often than not, and if you put it on and you watch it, you'll be a believer, and that's automatically drawn on here. And it's where the entire market history of the market gets delivered, and the weekend and the overnight session and all that. So it's very powerful. Its resistance and support are very powerful, and when it breaks, it means something. So initially, I'm trading in NQ, and I'm looking for little ranges and then the breaks, and I'm taking them. Like I probably shorted this down. I'm sure if I look on a tick chart or 1 minute, you're probably going to see 5 waves down to the low a day. And why is this area down here important? It was a strong move. At this point, everybody was thinking, wow, it's just going to keep going. But no, it's at 9:45. This is one of the time zone things. I get a message at 9:47 reminding me that 9:44 that 9:45 is coming. At 9:45, people are going to start thinking about this short position that they're holding and slow down entering, because they're going to be wondering about these 10:30 session 1 traders, and they generally like to, unless it's a super strong trend and there's a big catalyst, they generally want to lighten up and position towards neutral, and neutral meaning 50% range of the day, are these gold dots, which are automatically plotted, and the VWAP, which is automatically plotted. The zone between them is a neutral zone. It's an unwound zone. If you unwind all the longs and shorts, that's where you end up. And price tends to go back there many times a day. So at 9:45, people are going, well, maybe I'll lock in some profits and cover. And what do? They start doing that. And they buy into the selling. They're always clever. They get out before it actually starts to move up because they're smart. And I follow them. I do what they do. Then there's this positioning trade ahead of the 10:30 session 1 guys, and I'll generally scalp that. It's like the counter trade to the initial trade, and it usually happens in a window between 9:50 and 10:10. So I'm always looking for it in there. It might be a little late if the momentum's really strong. It might be a little early if they see something. But generally that dynamic plays out. It comes back up into the neutral zone and wobbles around a little bit. The bears weren't ready to give up. But then right at 10:30, you're right on the VWAP here. And the these guys, these big players, they come in and they assess all this and everything else that's happened in the entire market, and they've got big tools, and they like to put on one move and push everybody in one direction, and then scale out of it around 11 to 11:15. So what do? They come in and they put on a big move. They actually started here, put on a little dance stop breaker there, and then they push out this move all the way up to bottom of the opening 1 minute range where there's some sell tiers. You see it bounce back down there, and then it powers on through. That thins out a little bit. Those people move down and up, and then it shoots up here. The 1030 push right there, a really strong move to where? The high of the opening 1 minute range. And there's a sell tier there because it's resistance. And so then where does it back off to? So these longs, these big players, these longs, they exit 11 to 11:15-ish, and about goes right to the support of the 1 minute zone. All right, so these people and me are now out because the zone after 11:15 to 12:45, 1:15 is a very low percentage zone. This is generally viewed as the highest percentage zone, best follow through, and the 1:15 to 2:30 to 2:30, 3:30 is the next best range and next strongest range where the biggest players are pushing the best follow through in general, 70-80% of the time. And it's just a template, a way to look at things and a way to trade off of. If it's not behaving, if these things are just keeping going, then big order flow agenda is overpowering tendency, and you play it that way. So you're always looking to see if it's tendency or big order flow agenda overcoming it. And if that's trend and that's happening, then you have to shift over into that trend mode. And if it's not, then you're doing range or tendency. So anyway, it comes back down, and then it's turned over to what they call the lunch crowd, this very low probability zone for follow through. Most people don't trade it. Those that do and keep track of their trades realize they tend to lose money over time. Although you can get a good trade in there. I mean, it's like 80-20, 20% of the time you may get a really good trade in there, and 80% of the time not. But so what happens in here? It gets turned over to the lunch crowd, which is generally considered to be retail, and they generally have a bull bias. So it kind of works its way up here. And then 12:45, another key time-ish. These people, look what occurred here off the low a day, off this positioning trade to neutral, went up, inverted a right shoulder, and took off. So you have kind of a cup handle, which is often the case, pattern in there, sharp, tweaky, but it's in there. The forces are in there. You're always looking for the forces behind the patterns because they get tweaked in today's market. But anyway, so it comes up to roughly 5 pushes, 5 waves, nothing to do with Elliott except for the fundamentals behind Elliott, the way traders trade. So smart money pushes early, and then they back off, take some money out, get in at a better price. And then right around here, alert traders see what's going on. They see this break and they come in. So you have smart money, big money, alert traders pushing, and they push it up here, and then everybody takes a little off. And then retail finally gets the picture that what's going on, and they come in around here. They come up here and they immediately get harvested. Almost always happens. So anyway, up here at this 12:30, 12:45-ish, these long people are thinking, wow, what's going to happen at 1:15 when the next big wave of traders comes in? These guys get back from lunch, and they assess all of this, and they put on a big move. What are they going to do? Are they going to push up, down? They don't really know. So rather than take a guess, they're going to ease out. So these guys, the smart guys, ease out into this around 12:30, 12:45-ish, whatever, depending on the momentum. And that's when that big move right there into that time zone tells me I'm looking for exhaustion right there. And the second it happens, I run the fibs in there, and sometimes I'll even run the volume profile on that and look for the point of control just in that move. So looking for confluences. So when you run fibs on a day's range, you're not looking for it to turn right on a fib point, but if the fib point lines up with some other stuff, confluences with the support line of this opening 1 minute range or the VWAP 50% of range or the point of control, then you've got more traders there. Then you've got more of a chance of a buy tier being in there. But anyway, so it comes up here. These guys want to go neutral, so it starts urging toward neutral. I'll often take that trade. There's the positioning trade ahead of these guys at 1:15 and 10:30, and then there's the actual trade that they put on. Sometimes the positioning trade towards neutral ahead of them is a great trade. So trades back down. Those guys exit, harvest all these guys, all these longs, take money off the table. They're just trying to get neutral ahead of 1:15. So here's 1:15. Then there's a little leveling out in there. Didn't quite make it to neutral down here on the VWAP and the 50% of range. So what is it doing? It's still a little bullish, but so it puts in a wobble around there, and what generally happens is there's a decision zone sets up in there. Same over here, and I box it in along with a lot of other people. So I don't really know which way it's going to go. It's better not to have a bias. Your only bias is to try to hang with the move that these big players put on. And when you think about it, that's really all you're trying to do all the time, but you just have more of a focus if you know it's happening around 1:15 and 10:30. So when it breaks that box, look what happens. Look at the size of that candle. There's a lot of sell orders right there. And there's some buy orders up here too, but they don't get triggered. So at that point, people are going, okay, they're going to put on a sell. This is probing. They might put on a buy there and see how far it goes. They might put on a sell here and see how far it goes. If weakness gets revealed, they'll push into it with strength. So something about this in here told them that it'd be better to push down to get a big move. So they push down. They push down. Their first push is down to the VWAP and the 50% range of the total day's range. And there's a lot of people that are going to be in there. There's going to be a lot of buys in there covering this move. And it wobbles around in there a little bit. Get a little spike in the volume nodules in there. And look what this is. This is 50% of this wave up here, this red line. So you've got a confluence of things right there. You've got 50% of this move, you've got 50% of the day's range, and you've got the VWAP. That's a confluence right there. And stuff, people are going to target that. So when it starts moving down, there are people that are just targeting that immediately. They're putting a buy tier right around it and on this level. Okay, so it gets here, you could box that in and take that break. And what does it do? It pushes on down to 230. And so this afternoon move generally starts at 1:15, and then they like to be out around 2:30. So if you were to extend this chart, you'd see that this is these people exiting and easing out. And then what happens? Some more people like to be out at 3:30, but I'm not going to get into that section because it's not on this chart. So essentially, I'm looking at, I don't have any moving averages on here or anything like that. I just have price magnets. And the price magnets are the point of control, the VWAP, the 50% of range, and this opening 1 minute range, as well as this outer band of dots, which is the 30-minute initial balance, which is automatically drawn. All these things are automatically drawn on my chart. And the value areas in the volume profile, I'm always looking at that to see how it's trading within that. Is it getting out of that? So those are key things to understand. The gravity of these things, it's kind of like the gravity of a planet, this opening 1 minute range. You can see how much occurred right in there. There's actually kind of a head and shoulders up here. It's tweaky, but it went through the dynamics of head and shoulder. You can see a left shoulder, and then it pops higher, comes back and does a little right shoulder right there. It's a head and shoulder dynamic, and this is a right shoulder cycle dynamic. And this is a 5. If you're used to 5 waves into ABC, into a right shoulder and how it resolves, does it resolve up, down, up, off the top? Then you kind of are familiar with this, and you kind of know what's going to happen. You're trying to know what's happening just into the future, not a day, not an hour, but the next trade, the next few minutes. And I'm scalping that whole time. All these tendencies, when the tendencies get overcome, then I'm scalping that. Anyway, that's enough for number one.